This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are bang in the middle of the week, Wednesday morning. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, morning Prashant, morning Nigel. Exciting, second half of the week, right? Given that you have the FOMC policy, but the bulls are back, it seems. At least that's what we got yesterday. Hopefully some follow-on buying today.
Solid close, guys, yesterday. And I think we got help this morning from overnight US markets as well. So I think that's the good thing. There was some confusion, hesitation late last week, but all of that completely blown away yesterday. Solid close, as I said. Mid-cap index at new highs. The small-cap index is in the midst of its 11th straight winning week. I'll get to levels in just a bit, but as I said, there's help from overnight markets once again. And the good thing about the US is that the rally, which we highlighted, a few weeks ago, was completely primarily driven by 6 or 7 large tech names. It's broadening out. So the S&P 500 is up 0.7% last night. The Nasdaq is up about 1%, almost 1% as well. Now, the big talking point was, of course, the consumer price inflation numbers out of the US, which shows that headline inflation has softened. But the problem is that the core inflation is still stuck between 4.5% to 5%. That is the problem. If you looked at US markets and the CPI number yesterday, as I did, and then kind of looked at the reaction on yields, what did you see? You saw that yields actually sold off massively. There was over a 12 basis point sell-off in yields. You go to sleep, you wake up this morning and you see that yields actually ended 8 basis points higher. So there was a massive U-turn which you saw on US yields last night. By the way, it is so much so that across the tenor, which is the 2-year, the 5-year, the 10-year, we've got what is called the bullish outside days, which basically is that the market started at one point, high or low, and then completely ended at the opposite end of the range. And this is, by the way, just going by this structure, it's positive, and it basically indicates that there are higher levels in terms of US yields which are coming. But what was the sudden realization? It was not sudden, but I think, we put this out yesterday when the numbers came out, that markets in a way recognizing that regardless of tonight's FOMC outcome, and we get that during US time, the decision from the Fed may remain hawkish in the coming months. As I said, core inflation is very much persistently high, between 4.5% and 5%, nowhere close to where the Fed wants it to be. So we may get a pause today, but as many are saying, it perhaps will be sort of read as a hawkish pause. We'll see. There are still those very much in the minority who are expecting even today for the Fed to move by 25 basis points. But I think, more or less now, the consensus is pivoted to the fact, market positioning is pivoted to the fact that we will not get a rate hike, we will get a pause. Commentary will be important. Oil staged a reversal. Brent oil prices are back above $74 a barrel. We had a 4% sell-off and a near 3.5% rally. Now, let's just sort of get to our markets and levels, really. On the Nifty, it's very simple. We must hold Friday's low, which is basically where the market has bounced off this week from. 18,555 is the level. On any downsides, any weakness which emerges, that level needs to be defended. On the way up, the Nifty needs to take out, 18,788 on the way to the all-time high, which is 18,887. On the Nifty, these are all very near-term levels. You get 1 or 2 good days and you're basically at all-time highs. So you're practically there. It's just kind of biding time. The Nifty bank closed above the 20-day moving average. We had a slip under 20-day, but as I said yesterday in the morning as well, the close under 20-day was not significant. It was very minor. We managed to defend it. We are above it as of yesterday's close. The 20-day comes in at 43,991. We left off at 44,079.80 yesterday. So that becomes the first number to defend in a way. But the recent low, which is 43,874, will be the next number after the 20, if the 20-day were to go. And on the way up, 44,500 has been elusive. It's a number we've put out at least for the last 2 weeks, and that needs to be taken out for further upsides to really materialize. SGX is indicating, I think, about a 50-point higher start. Consensus is completely stacked up in one way with regards to the US decision, Fed decision. If you get a bit of a surprise and you don't even know how markets read what Fed chair has to say, what they have on their minds, there's a Q&A, etc. as well. So things could get volatile. So I would say, if you're trading very near term, if you're making money, take some money off the table, come back tomorrow morning and evaluate what you want to do. This is purely Nifty, mid caps, small caps, etc. Of course, I mean, the momentum has been very strong, and there it becomes extremely difficult to get in, out all the time very quickly and in a very nimble way, because prices move, leaving where you wanted to get in, your entry points far behind. This is on the Nifty. I mean, if you're trading, I would say don't chase the move given what you have in terms of event risks over the next 24 hours or so. Sonia.
Oh, absolutely. And now I think the momentum is intact, right? It's in fact building up. The market knows what to expect from the FOMC meeting. After the inflation data that came through, the expectation is that there will perhaps be a pause this time around. And the market is building that into its prices as well. So today, the start is in the green. And as we've been telling you, the Nifty is now less than 1% away from the all-time high. So we are virtually there. It's just a matter of time before we get past that level. I also want to point out that if you look at the constituents, a lot of the rate sensitives have been moving higher this month. So whether it's Axis Bank, which is up about 6% this month, a lot of auto stocks have been the big movers. L&T is your big mover. So it's a secular run that we've seen in the first 14, 15 days of June. In that context, FIIs also have bought quite a bit. In fact, after 2 days of selling, FIIs have come back onto the buying radar, almost 1,700 crores of cash market buying by the FIIs, while DIIs sold a tad bit, about 200 crores. So the flows are also positive, indicating that this market will move forward. Now, if you look at the global markets, it's a 14-month high that most global markets are sitting on, whether it's the NASDAQ, the S&P 500. We had a very strong run on the Dow yesterday. US inflation has hit a 2-year low. Now, a CNBC survey indicates that 91% of the market participants are expecting a status quo from the US Fed this time. And majority are also expecting the Fed to pause until the November policy. So there's no move expected on the Fed until the policy in November. At least that's what the expectations are. So let's see, as Prashant was also pointing out, the mid-cap stocks, I guess, will be in focus. They'll continue to be on the buyer's radar. Real estate stocks have been hitting fresh 52-week highs. There are some brokerage reports from the likes of Motilal, Oswal, etc. on Oberoi Realty this morning, so we'll focus on that. But in general, if you look at it, the momentum has been intact for the bulls. And it's just a matter of time before, I guess, new highs get taken out.
Well, that's right. I think the bulls have booked a date and they're saying this week we're going to go to those all-time highs, and hopefully the Fed supports them. Yesterday, there was a Tuesday expiry effect phenomena that played out because the Nifty Financial Services Index and the Nifty Bank, there's an overlap of stocks between them. Both of them in the last hour, they moved up. And that's because the Nifty Financial Services Index played out expiry in favor of the bulls. Now, institutions, they bought more than 1,000 crores. You like that number to stay in that vicinity of around 800 to around 1,200 crores. Or we have seen that the market gets support out there. Just one more data point. If you look at the Nifty 50 stocks, the total delivery on a day-to-day basis is anything between around 12 to around 14,000 crores, very, very roughly. Now, Axis Bank, the stock is at a 52-week high. And on a day-to-day basis, I'm just looking at it, it's not that big a weightage. It's the 10th place in terms of weightage on the index. And it's accounting for nearly around 9 to around 10% of the total delivery on the Nifty 50 stocks. So just keep an eye out on that stock. That seems that there is some institution that's tanking up. In fact, last week it was more than 10%. It was the highest delivery, delivered stocks from the Nifty on a couple of days. So that's why I just thought I'll point that out since the flows have been quite strong. Looking at the FI action, well, in yesterday's trading session, they added some long positions. There was some unwinding of position that we saw in the Nifty. But the FI as well, they added some longs and they covered some shorts. Now they're net long with 51% of their positioning on the long side. Looking at the options data then, the 18,700 put, 18,650 put, between them, they added close to around 85 lakh shares. So there is writing that we're seeing at those levels. However, the 18,700 call was getting written at will the entire of the past week. Now this week, those bears, they are getting a little bit cautious. Yesterday as well, we saw a big unwinding of the 18,700 call, telling you now there is some panic among the bears. They are fearing we're going to be headed off to all-time highs, and maybe that 18,750 to around 18,800 level may not hold out. Remember, that's the resistance level. Even for today, we're going to be starting off closer to those levels. Last week, we went around that 18,778 approximately. And from there, we did see a bit of a U-turn. So we're going to be opening in the congestion zone, though on the downside, going by the writing we have seen at the 18,600, 18,700 put as well, you have the support level that comes up for you on the screen. Nifty Bank, it needs to hold over the 20-day MA, but I think the last couple of days, it's been going to around 43,850, 43,880, and from there we're seeing a bounce. So that's the crucial support zone. SGX if we suggest 50-point bump up. We ended at the high point of the day. I expect that to get sold into, and you look to buy the intraday dip. Don't go and chase the opening. That's the call.
All right. That's basically how things are looking. 50 points higher on the SGX. We'll tell you what's lined up here in the next 30 minutes of trade. So we get you updates from global markets. Jahangir Aziz of JP Morgan will react to the CPI numbers from the US and what he thinks the Fed will do. Our research team will get us the list of top 10 stocks of the day and which way they will likely move. And Sanjeev Bhasin of IIFL Securities will be joining us at 8:30 with his call on the markets.
All right. Well, let's kickstart the show with some views coming in on the equities front. Vikas Jain of CLSA says for May, FII inflows into India was higher than other emerging markets and at a 9-month high. He says big changes to the neutral weight of the benchmark notably influenced relative sector weights of FIIs. He says their overweight in financials fell to a multi-year low while their underweight in utilities, staples, IT and materials fell to multi-month lows. Basically, FIIs moved their relative weight away from financials, industrials, autos and healthcare in favor of IT, materials and staples. Vikas says India is back to being the most favoured market for FIIs.
Okay, well, let's get you some money market views as well. So on the rupee, Kunal Sodani of Shin & Bank says US inflation shows signs of cooling, providing a rationale for the Fed to pause on rate hikes, while on the other hand, a 25 basis point rate hike from the ECB is priced in. For the dollar index, 103.02, the 100-day simple moving average aligns as the first support level to confirm a change of trend, followed by the 55-day simple moving average at 102.55. They continue to watch the Chinese yuan, and for the USD INR, 82.1 to 82.15 to the dollar acts as a support, while 82.5 to the dollar is a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond traded in a range of 6.97 to 7.04% last week. He says yields moved higher on a hawkish MPC and weaker demand in longer tenor bonds in the weekly auction. He says short covering ahead of the MPC and the US CPI has led to some reversals in bond yields. For the rest of the week, Neeraj says the market will watch out for the FOMC and weekly auction demand. He expects the 10-year benchmark to trade in a range of 6.97 to 7.05% for the rest of the week.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But for the time being, we'll run you through the list. Anupam Rasayan, Zydus Life, we have Capacite Infra, Zine Enterprises, Vodafone Idea, Dhampur Sugar, KEC International, ONGC. They have stocks on the back of positive news flow, while you have Tata Chemicals and Balkrishna Industries that could be reacting to negative news flow.
All right. That's basically the view out there. Jahangir Aziz is now joining us. He's head of emerging markets, economics research and commodities at JP Morgan. Jahangir, great to have you with us here. Good morning. Thanks very much for your time. Let's just tackle the CPI number which came out last night and the market reaction to it. Yields plunged, and this morning I woke up and yields were higher. The 10-year is up 8 basis points. What changed and what does this mean? I mean, is the market telling us something?
No, I think, the market is reacting to the fact that, you had headline inflation coming down as expected. It was a tad higher than what we had, in our forecast. I think it was the core inflation that was troubling the market. Again, in the core inflation, it did come down, but again, was tad higher. But the core inflation is the big thing. And it essentially said that, it is getting stickier. And particularly, the favored indicator for the Fed, or at least for the chairman, which is core inflation less rentals, which is getting more and more sticky. So I think that's what the market is reacting to. And again, it's coming in the back of the non-farm payrolls. Again, had a stunning number. The last print again, it was 14 months in a row. It has moved above consensus forecast. So I think all in all, I think that's what the market is reacting to, was that, the things in the US may be bending in the sense that, things are slowing down, but clearly it's not breaking, at least not in the near term.
Okay, not breaking in the near term. Jahangir, good morning. So the expectation is that the Fed will pause and not move this week. Mm-hmm. But the other narrative is that the Fed could pause up until November this year and then take a call. Is that your view as well? And what are you expecting from this decision tonight?
So we've been talking about this, for some time in the last month. So that's our view. The view is that the Fed is going to take a pause over here, and that the pause is going to be prolonged. And in a sense, the Fed is going to let those long and variable lags to play out and see where the economy goes. The economy is in a slowdown trajectory. The non-farm payroll numbers of the labor market isn't really cooperating. Inflation is coming down, but it's probably coming down tad slower, or probably significantly slower than what the Fed would have liked by now. At the same time, if you look at all the concerns that were raised about the banking sector spreading out, that banking sector spread has been contained. If you look at the senior loan officers survey, those are still very, very elevated, saying that there is significant amount of banking sector credit squeeze. But at the same time, if you look at the Fed's own measure of financial stress, that has actually come down over the last month and a half. So I think all in all, again, it's the same message that, you have to wait and see where things turn out. And we don't really see a significant slowdown taking place till probably towards the end of this year and into the beginning of the year, where we do expect a modest recession. And perhaps in the first quarter of next year, that's when the Fed might comply with the demands of the market and provide them with the rate cut they'd be hoping for.
All right. Morning, Mr. Aziz from here in India. The markets, global markets are positioned for this pause. But what about the RBI? They as well went in for a pause. However, the commentary was read as hawkish. I wanted your comment on that, as well as, the recent data points where you have inflation coming down, IIP numbers looking up a little bit. So how are you reading it?
So I think more or less, the RBI was sort of looking at their own views about the Fed, and they sort of got it right that the Fed would go on a pause, and most likely it's going to be a hawkish pause. So I think tomorrow's the Fed, the big thing would be where the dots are pointing to. If the dots are pointing higher, then clearly the FOMC is signaling that most likely we might have to end up raising rates sometime down the road. I think the similar kind of message came out from the RBI 2 weeks earlier than the Fed. But I think, the Fed's decision was largely telegraphed because of what Jay Powell and the vice chair had said about 2 weeks back. So, I think the RBI was basically saying exactly the same thing, that look, inflation is coming down. Growth has shown a significant amount of resilience, surprising resilience, somewhat would say, and therefore, the next move could well be a hawkish move rather than a dovish move, because the economy is continuing to showing resilience, whereas inflation does not come down to the comfort zone. So I would say that was sort of a precursor to the kind of language that the Fed would be using tomorrow.
Jahangir, would a pause, right? I mean, Fed officials have kind of indicated to it, and that is one reason why the market expects a pause. But would it kind of throw markets into some kind of confusion? Because so far it's been steady, right? We're data dependent, and it's got to come off, and now suddenly you maybe pause because, well, you've hiked so many times in a row. With underlying, as you yourself pointed out, some of the data points, etc., are pretty still saying that the economy is strong, right? So does it? And by the way, three other central banks have paused and then restarted hikes again. Canada,
that's correct.
Australia, Norway. They all paused and they all started hiking again. So just wanted you to comment on that. Yes.
No, I think that's right. I think this idea that the Fed is just simply going to skip June and go back into July, which some commentators have been saying, I think that's a very hard thing to think about, right? In the sense that what exactly will you know in the next 1 month that is going to change your mind? And if you are so worried about things, you might as well do the insurance hikes, so to speak, right now. I think that the language of the Fed and the guidance of the Fed has been that last FOMC, that they have reached the appropriate level, so to speak, and I think that they feel comfortable that at this level, if they basically hold this level for an extended period of time, the impact of that will gradually cool down the economy and bring down inflation. Recall that the Fed, while the Fed staff has a mild recession in the fourth quarter and the first quarter, which is also our call, when Jay Powell was asked this explicitly, he basically still believed that the U.S. could avoid a recession. So I think that's sort of is where things are going. And again, in terms of the market, I think whereas there is a huge difference of opinion in the market, right, in terms of whether this is enough or whether or not they will have to rehike. We do have a risk scenario in our own heads that the Fed might be pushed into rehiking sometime in the future. But all of that is true. I think the market will accept that this baseline is what the Fed has had in mind. The baseline might not actually be exactly what the Fed had in mind. Maybe they would have liked a little bit lower inflation, but broadly it's panning out so far. Again, not across the board. Labor market inflation isn't doing exactly what they would want, but it's panning out broadly. So it's time for the Fed to basically say, okay, fine, let those variable and long lags of monetary policy tightening actually work itself out through the system.
One final question then, Jahangir, you have the data improving in our own markets as well, right? Whether it's the retail inflation or even the growth numbers. And that is showing up even in the stock markets in terms of earnings of companies, right, across the board. How are you feeling about growth now? Are you penciling in higher growth this time? And on the inflation front, what are your projections?
So we still think that inflation will take a very long time to slow down, and core inflation will be sticky, and that the RBI will have a difficult time getting inflation into the comfort zone. On growth, we have a huge gap between what the RBI is thinking and what we are thinking. We are still thinking in the 5.5 range. RBI clearly has a significantly higher range. And again, our view is based on the idea that, look, emerging markets, whether it's China, whether it's India, whether it's Brazil, has shown a significant amount of resilience in the first quarter of this year. That resilience is dwindling, and the resilience will continue probably in the second quarter also. But beyond the first half of the calendar year, it is very difficult to see how growth gets supported, simply because every other economy in the world, which are the big drivers of the global economy, and we're talking about the US and Europe in particular, is going to slow down and quite slow down quite sharply. In fact, I've used this language before on the show with you, that you need the economies to slow down, because without that, you're not going to be able to tame inflation, and will force these central banks back on to come back and start rehiking again. So I think there is not just hope, but there's that need for these economies to slow down. But if the global economy slows down at that level, in order to bring down their own inflation down, that is very hard to see emerging markets, whether it's India or China or any of Brazil or any of the emerging market, actually deliver the kind of growth rates that people, particularly in India, are penciling in at this point in time for the rest of the year.
All right. We'll leave it there, Jahangir. It's always a pleasure speaking with you. Thank you very much for your time. And I hope to have you back once we have the decision from the Fed and we hear from them as well. We'll take a very quick break here, commercial break. We are back. Our list of top stocks to watch with our research team lined up next. Stay tuned.
Well, the market momentum is intact and looks like we're going to have a positive start this morning. Let's drill it down straight to individual stocks now. We have our research team joining in. First up, Tata Chemicals and Anupam Rasayan is on our radar. Sonal is here to give us more on that. Sonal, hi, morning.
Good morning, Sonia. Let me start with Tata Chemicals. Well, Nirma had cut soda ash prices yesterday and Tata Chemicals has followed suit. They have cut domestic soda ash prices by 2,300 rupees per ton, and this is a big cut that has come by. Now, remember, Nirma had cut prices by around 2,000 rupees per ton yesterday, and if we look at the trend, now soda ash prices stand at 31,600 rupees per ton, which is the lowest level that we have seen since February of 2022, and this is the third cut that has taken place in Q1 of FY24 itself. Centrum says that sharp revision in prices is expected to lead to some margin contraction, and this is despite the respite that has come by in power and coal costs, and this would lead to some pricing war as well. Expect some negative reaction on Tata Chemicals. For Anupam Rasayan, they have signed a letter of intent. It is not an agreement, still a letter of intent, where the amount is 2,186 crore rupees. The tenure for this one is 5 years, and this is with a leading Japanese specialty chemical company. In last couple of quarters, they have signed LOIs worth 7,000 crore rupees. The supply will commence from calendar year 2025, but we'll have to see how it's executed because it's still a letter of intent right now.
Okay, all right. Thanks a lot for that, Sonal. Well, Ekta joins us to tell us about a handful of stocks that she's tracking as well. Morning, Ekta.
Morning. Well, yes, I am watching Zydus because the USFDA inspected the group's injectable manufacturing facility in Ahmedabad, and they have issued 0 observations, so it's positive. There is also an Elara note on Zydus where they have a buy. According to them, the company has announced final nod for Chantix generics, which is basically a drug used to stop smoking. The estimated potential size of the drug is $300 million. The company has said that it is positive on it and they could probably make $20 to $30 million per year for Zydus Life. That's what Elara is factoring in from this possible opportunity. Now, Capacity is the other stock that I'm watching because New Quest Asia Investments has sold 32 lakh shares. Society General has bought around 24.17 lakh shares in that particular stock. And Z Entertainment is also in focus on account of some amount of fund action.
All right, Ekta, thanks very much for that. More stocks with news flow. Surabhi's got that list. Morning, Surabhi.
Morning. So first one on my radar is Vodafone Idea. There is a news report from ET which suggests that as a part of their revival plan, the company proposes an equity infusion of 14,000 crores. Now, Aditya Birla Group and UK's Vodafone Group are expected to contribute half the amount, but CNBC has not independently verified these news reports. Next on my radar is Dhampur Sugar. They have completed an expansion of 100 KLPD distillery capacity. With this, now the total capacity stands at 450 KLPD. Next is KEC. The company has won some new orders worth 1,373 crores, which across different business segments. And lastly, Balkrishna Industries. The company has suspended operations at their Gujarat plant due to the cyclone, and the plant will be closed for the next 2 to 4 days.
All right, thanks a lot for that. Well, let's go across to Manisha Gupta now to find out what's the latest on the world of crude. Considering that you have the US FOMC meeting upon us, this will be a crucial element to track. Manisha, hi, good morning.
Morning. Well, absolutely. You know, with the U.S. inflation slowing in the month of May and China lowering short-term lending rates for the first time in 10 months, both of these things have augured well for commodities. So the crude oil prices, which fell 4% on Monday, gained 3.5% on Tuesday, and we are trading on the higher side of the range right now as well. The metal space also surged, celebrated what China had done. Remember, we've been waiting for a stimulus or some kind of a rate cut for a very long time right now. So copper is now trading at a 1-month high. In the overnight markets, you saw steel prices gain up by 2%. Iron ore is trading in the positive. Nickel prices gained up by nearly 4.5%. Zinc is up 2% overnight. So everything in industrial metals also trading in the positive. Well, of course, today is the U.S. Fed meeting and tomorrow is ECB and day after is Bank of Japan. So that doesn't end. But at this point in time, it is a lot of positive cue and the sentiment suddenly turning into positive.
All right, thanks a lot for that, Manisha. Let's do a quick recap of our top stocks with positive news flow. There's Anupam Rasayan, Zydus Life, Capacity Infra, Z Enterprises, Vodafone Idea, Dhampur Sugar, KEC International and ONGC. While stocks with negative news flow, there's Tata Chemicals and Balkrishna Industries. Let's take a quick break. Sanjeev Bhasin of IIFL Securities will be joining in for some stock talk in a bit. Later, we'll connect with Ben Cavender, the Managing Director at China Market Research Group, to discuss China's surprising rate cut. Stay tuned.
Welcome back. Well, we're going to be focusing on the Chinese surprise rate cut that came about in a short while from now. We have Ben Cavender who will be joining in, but we also have Sanjeev Bhasin who's joining us to talk about the Indian markets as well. Morning, Sanjeev. Good to speak to you as always. Well, the markets have just been moving northward, but I believe you're going to be traveling, and when you're away, you're expecting the markets to top out in the next few days and then pull back. Is that still the call on the Nifty, or do you think we're going to head higher?
Yeah, good morning, Nigel, to you, Sonia and Prashant. And if you recall, I'd given you the dates that by 15th of June, all the bears standing will be dead. And when everyone turns bullish, that's the time to go for a holiday. So yes, I am on leave from tomorrow, and I expect the markets to have a rather painful correction maybe in the next fortnight. We think everything is priced in and stocks are priced to perfection. So no harm done. You could still trend higher by another 100, 200 points, but it depends where your portfolio is. So this is the time to take some money off the table, beat the heat, and go on a holiday.
What about the correction? How large can it be if you're going to give us a level on the Nifty?
No, I don't want to start that. I'm saying first, let's see the correction. All I'm saying is take money off the table.
Off the table, okay.
But in case you see 17,500, then call me in the next 10 days.
Sanjeev, that's not fair, right? I mean, you're going away on holiday and you're leaving us to see this market fall if and when it comes.
By the way, that comment almost seemed like my doctor tells me. 103 fever, call me. No matter day.
But what do you do? What do you do at a time like this, Sanjeev? I mean, has the time come to sort of take some profits off the table? And if yes, where do you do that?
Yeah, so Sonia, I think personally, like I'm saying, sometimes it is always good to be wiser rather than wait for, tops and bottoms. Those are numbers. You could hit a 19,000. I'm not denying that in the next few days, but that seems a big very, very low probability in the sense that everything is priced in. You see, the money which was missing the markets was the FI money, which was underweight. And believe me, some of the mutual funds who thought they are smarter than everyone and were sitting on large cash pools. Now that is getting deployed in a hurry. It's all the signs. You cannot have all asset classes rise in tandem. Gold hit new highs, bonds hit new highs, and the S&P is hitting new highs. So something will give, and I think all that is priced in. Now, it's not that there is a big negative. All I'm saying is that it's always good to leave some on the table and take some chips home. So, Sonia, when everything was dull and there was no mojo at 16,817, that's where you enter. And then closer to 18,800 is where you take money off the table. Don't try and time the market and leave some money on the table. I think mid caps are very, very frothy. There has been a lot of euphoria built around all that, but that's because there has been trading profit. Once you see some sort of plateauing over there, you could see the correction get a little bit deeper. So I am of the camp. This is the time to raise money and sit on the sidelines.
All right, so raise money and sit on the sidelines. Sanjeev, we'll give you some time to just ponder over individual stocks. We'll come to you in a bit. We also have to get a quick comment in from a global expert on what's happening in China, because that's important. China did a surprise rate cut of its key lending rates. The reverse repo is cut by 10 basis points. And this is largely because the growth recovery was losing steam. In order to support recovery, China has gone ahead and cut short-term borrowing costs. And there are now expectations of further easing from the Chinese government. To discuss more on this, we have Ben Cavender, who's the Managing Director at China Market Research Group, joining in. Ben, good morning and thanks for joining in. This rate cut wasn't expected, but going by what the government has done, the expectation is perhaps there could be more easing in the months to come. Is that your view as well? And how are you looking at the Chinese economy now?
Well, I think this was a very clear signal that the government recognizes that any kind of recovery that maybe happened through the first quarter has really kind of lost steam this quarter. And so more action needs to be taken. So this rate cut was definitely a surprise. It's probably a good step in the right direction. But I think, at least the word on the ground here is this really isn't going to do much as far as moving the needle and getting consumers to spend. And it probably also doesn't do enough to help exporters in a really meaningful way lower their prices to the extent that they're going to be able to get more business for overseas orders. So I do think we'll probably see continued action by the government over the coming months with more reserve ratio cuts, Very possibly some kind of direct stimulus to consumers, though it's a little bit unclear whether or not they're going to be doing that now or maybe waiting another quarter to see.
Ben, there is, we'll get to demand for commodities, etc., and your assessment of it in just a bit. But there is also the other angle to it, right? I mean, if you read the Financial Times, for example, they've been running a series of stories about how investors, large U.S. investors, are actively cutting exposure to China in a pretty big way. We saw what Sequoia did. I think other large funds have also done similar things. And here in India, I mean, the general chatter is that a lot of it will go to other markets, right? Like, for example, 30 years ago, there was this Asia ex-Japan kind of terminology got popularized. Now people want Asia ex-Japan ex-China. And India, of course, is a large economy which perhaps benefits. I just wanted your thoughts. Is this happening as we speak? And what's the feedback from the ground?
So I think if you look at, for example, where private equity money is going, there's definitely been a big pullback, and I think that pullback is going to continue. In having discussions with fund managers recently, I think very few are seeing a light at the end of the tunnel for China right now. They just don't want to deal with political mess that China and the U.S. are in, so they're absolutely pulling back. I think that's going to continue for a while. If you look at the brands and how they're investing, I think a lot of brands have sort of written off 2023 as kind of a lost year. They have this understanding the consumer maybe is still quite weak and is really saving as much as possible right now. So brands are sort of refocusing to 2024. So I think there will be some kind of recovery coming in China over the next 6 months, but it's really going to be driven by multinational brands, not so much by the investment community. And as far as where that investment community is moving money, I think absolutely, yes, India is going to be a beneficiary. Probably some other Southeast Asian nations will also be beneficiaries. So I think it's a great thing for India right now. It's going to be a difficult story that China is going to have to tell to get them to come back right now.
All right. Hi, Ben. Good morning. Ben, what about, could you give us a couple of data points, say on the Chinese real estate space? Because that appears, it's in some pain out there, given the kind of action we're seeing from the central bank as well. And that has repercussions for the commodity markets as well. So your take on that?
Yeah, I think right now the real estate market is in it's a very difficult position. It's in a holding pattern. It's not going to get better anytime soon. We've had multiple discussions with senior executives at major Chinese developers. So if you talk about Wanda, if you talk about Shimao, who's some of the better developers in China, they're under a tremendous amount of pressure right now with a lot of unsold property, still carrying very significant debt burden. So I think that's an issue. I think also what we're seeing right now, which is probably more problematic over the long term for China, is the local governments have really seen real estate sales essentially go to zero, and that's has huge implications for their tax base right now, and it's a very difficult situation to get out of.
Okay, so what are you factoring in terms of the growth in China? What are we looking at, say, by the end of FY24? I think there is an expectation that it could be, to the tune of about 5 to 6 odd %. And it may not surpass what we've seen in the past, but your own projections?
Yeah, for many, many years, I've been quite bullish on China. I tend to be quite positive about China overall as far as their economic planning and what happens here. I think this year, counter to that, I would say it's highly unlikely in my mind that they're going to hit that 5% target that they've talked about. Probably we're going to come in somewhere closer to 4%. I just don't see positive signs coming from the consumer or from factory orders right now that would suggest that China is going to have the kind of recovery that maybe the government would like to have this year.
Ben, sort of just to go back to the larger impulse right now, which is, U.S. Companies in that sense, but large investors moving away. You think it's going to go continuously in one direction, or you think the government in China will do, will change course at some point? Do you think it's inevitable that there is a break and that, the gulf gets wider and wider? What's your sense?
I think at some point we'll have a turnaround. I think the reality is that there's no possible way to do certainly a complete decoupling between China and the U.S. The economies are still too integrated. I think a lot of U.S.-based funds and U.S. companies still would like to have a strong presence here. They just don't see now as the right time. And I think the government as well realizes that, they can push their own agenda as far as sort of rebalancing international trade, rebalancing, reliance on the dollar, maybe more towards the renminbi, but they can only do so much. And so as the economy stays slow here, I do think we'll actually probably see a little bit of a recoupling and hopefully things opening up and flowing back in this direction again. I just think it might take 6 months before that starts to happen.
All right. Thanks a lot for joining in, Ben, and appreciate your thoughts on the Chinese market. But let's get back to our own markets now. Sanjeev Bhasin has been sitting by for a bit. Sanjeev, thanks for waiting by patiently. I leave the floor open to you. If you did mention, of course, that this is a time to perhaps take money off the table. But if someone is still looking to sort of build their portfolio, are there any spaces, especially the mid-cap and small-cap end, that still look interesting to you?
Well, first, let me comment on the China factor. If you remember, 6 months back, the whole gang was saying, the foreigners, that this is the time to put money in China. India is overpriced, China is underpriced, and so on. So at that time, you got to be a pirate, and that's what Nigel and me joined in when Christmas is there. They say, yo, ho, ho, and a bottle of rum. That's the time you actually become a pirate and buy these fools when they are selling lock, stock, and barrel. And this is the time you become a saint, Sonia. Sell what you have and go for a meditation camp. On a lighter note, I am very, very sure the cake belongs to Maruti. Though I am a teetotaler, I'll join Nigel for tea. Maruti is my top pick, Sonia. It's headed to 12,000 just as MRF has hit 1 lakh. Maruti is going to new highs. Simply read the newspaper, smell the coffee. My office in Gurgaon is just next to the Maruti office. They are now launching a competitor to the Innova. The market space in the PV sector, they're going to go on 25% share. So if you are looking for a stock for this year at 12,000, it is Maruti. Now, this is my large cap pick. Aside from that, I have been one of the buyers in Z in all this humdrum. I think the sooner rather than later we see the back of Goenkas and the input of Sony, there will be a change. Bad management, bad intentions always give an opportunity, and that is what Z is giving. Aside from that, Sonia recall and particularly Prashant, 70 rupees. Piramal Pharma is 93. 400 rupees. Jubilant Ingrevia is 440. And Chemplast Sanmar is 500 from 400. Chemplast, Jubilant and Piramal will continue to rule the roost. But remember, buy some protection, leave some money on the table, and then we can celebrate once the markets give you another opportunity of getting in. There is a lot of froth, and I think it is about time that you took some money home.
Right. So these three names, Sanjeev, if you bought when you said one should continue to hold, right? One can continue to hold these three names.
Correct, Prashant, and you're not going to be so nimble that you'll be able to sell it at 90 and buy it back at 80, if you get. But I think these are constructive stories. Like I said, Maruti is a no-brainer. I've been bullish from 7,500. And as a disclosure, it is in our portfolio. It is one of our top picks along with Mahindra. And we think this Hero Honda are going to be the stars of auto for this year.
All right, Sanjeev, from the last couple of times you've joined in, actually, I've not even had a single drink. So I'm also feeling like a teetotaler. Just thought I'll put that out. But I'm going on leave. I'm also going to be traveling the next couple of days. So maybe I'll have to catch up.
You said a bottle of rum, and Nigel is like got all that excitement going out his holiday.
Actually, I got a nudge from my wife saying, Nigel, please clarify. So I said, let's put it out there.
But he's talking about Maruti, right? So he's saying that buy the Maruti share now, and then when it hits 12,000, move to a BMW straight away.
All right, Sanjeev, you've given us a few picks, and as you've mentioned, some of them have done quite well. All three of them actually have done quite well. But ye dil mange mo. Give us one more from the broader markets. A small mid-cap company that you believe has big potential, because some of them are flying off the shelves. So you need to be a little careful. But you have to give us one this morning. What would it be before you head out for your holiday?
So look, it's your competitor, but Z is getting you all the right ingredients. The stronger hands are entering. The Goenkas with 3% held it to ransom. Once they are out, you will see entertainment, according to me, Sonia, cannot be at 17,000 market cap when Walt Disney trades at $200 billion. That's the combined market cap of Reliance and TCS put together. So you can imagine in a country like India, Sony is going to be a game changer. But we have to go over these processes in the next few months or weeks till they get the NCLT and so on. Now, when fear and greed are high, fear is high, that's when you'll really make bang for the buck. So I have, as a disclosure, have seen my personal portfolio. We have added it for some of our clients at this 190, 185 mark. We think this has the prospect of being a doubler in maybe a year once we have everything clear on Sony takeover and so on. Yes, there are a lot of ifs, but that's what makes the market. On the other hand, Sonia, a lot of my fellows and friends at 60 all follow you. And generally, they will not take cues from me. They will say what Sonia does. So if you are going to be bullish, I think the consensus is that being long on the market, hardly anybody sees what I say. It's more on what Sonia says.
Yeah. That's very sweet. Thank you. I will take that, I will take that generous comment from you. Thanks a lot for that. And of course, to all our viewers, I mean, we are just putting out the cues, right? These are not recommendations in any way. If we knew which way the markets were going, we wouldn't be sitting here and coming to work every day. We are just commentators. That's our job. But thanks a lot, Sanjeev, for joining in. Appreciate your thoughts. As always, entertaining, infotaining, right? So much information. Yes, you were saying something.
Yeah, so, and remember, in 10 days I'm on leave, doesn't mean that I'm not in the markets. If you do get that 17,500, so you and Prashant are welcome to call me. Day or night, I'll attend to your call at that time.
Sanjeev, I also would like to call you.
Sure, Nigel, you're most welcome. You have not paid a visit to Delhi, and you and Navneet need to come and have the best butter chicken in Gurgaon. And that's an invitation for all of you, a repeat invitation.
We have a date on that.
I'll have the best single malt ready for you.
Thanks a lot for that, Sanjeev, and wishing you a good trip, and I look forward to catching up with you. Well, time to slip into a short break, though, but what's lined up for you on the other side? We have Anush who will be joining in to give us a quick trade setup, and post that, we'll get you some top picks for the day. We'll also be getting our technical and F&O experts. We'll decode the stock market rally as well with our Momentumizer segment. At 9:10 a.m., Nimesh will be joining in with the standout brokerage report for the day. And before market opens in CNBC-TV18 Stock Sport, we highlight all the stocks in the news that you need to track for today.
Okay, welcome back. The SGX Nifty will come up on your screen. I think it's still indicating a higher start, 40 points or so. Anuj is here with a quick check on things. Anuj, morning.
Morning, Prashant. Well, yesterday my conviction was that the market should do well even after gap up. Today my conviction is that today is a good profit-taking day because long traders would have made good 200 points after today's gap up, and 18,800 to 18,850 is not a zone in which you want to buy. It's a profit-taking zone very close to all-time highs. For fresh entry now, you need to wait for a reaction or for the Nifty to cross 18,900 and sustain above it. Crude and bond yields have gone up, and I think that could hurt sentiment a bit. New high will happen. I mean, of course, if not this week, then second half of June. But maybe you want to wait it out a bit. FOMC decision today, and of course, the big question is, will it be a dovish pause or hawkish pause? It will be a pause. That's something which we all, of course, know now. But the market's going into the event with long positions, so that leaves a bit of a room for disappointment at higher levels. On the Nifty, I'll keep an eye on how Nifty IT behaves today because, you know, JP Morgan has sort of downgraded some stocks in the sector, and JP Morgan is a very well-respected name in IT, so that's something to keep an eye on. As I said, 18,750 to 18,800 is the first resistance, and 18,800 to 18,888, which was the all-time high, is the next big resistance. In terms of support, it comes in at 18,650 to 700 thereabout. One more thing, you should square off all positions today at 320 because carrying any positions for tomorrow is a bit of a gamble. You could have carried for today knowing that there would be a gap up, but tomorrow there's no way of knowing that. On the Bank Nifty, there was a bit of a disappointment because it failed to cross the first hurdle of 44,150 to 44,200. And I think there's bigger resistance placed at 44,400 to 44,500. So you either want to wait for it to cross 44,500 and sustain above it, or give you a reaction to 43,800. One last point, keep an eye on HDFC Bank because from 20th July, it's going to be one entity. The record date is likely to be announced very soon. And that's within stock which has been struggling a bit. Even Kotak, X of that, the Bank Nifty is strong. But as I said, today would be a good day to take some profit home.
Okay, good day to take some profit home. Perhaps don't overstay or welcome in this market. That's the view. Thanks a lot, Anuj, for joining in. Have a good day. Well, Mitesh Thakkar and Sudarshan Sukhani are joining us now to talk about how to approach trade. Sudarshan, let me begin with you. There's a big event upon us, but I think in all likelihood, you know, there might be a pause this time. At least that's what the street is anticipating. What do you do at a time like this on the index, and what are the individual stocks that you're looking at?
Yeah, good morning, Sonia. See, normally the big event is an avoid, and that's what I would suggest today. Now, ideally, the market trend is up. The same theme applies. If you have a sharp dip, go long, but it's much better to step aside. You know, we have seen a very decent rally from last week. So it's not as if we are buying at a very lower level. So then we have an event, and the fact that we will buy at elevated levels, this doesn't mix up together. So for today, the view is intraday you can go long and take exits and do whatever you want. But for the banks as well as for the Nifty, it's wise to step aside and re-enter tomorrow after seeing what happens.
Mitesh, good morning. What about you? What are you looking at this morning?
Yeah, good morning, Prashant. Yesterday we had initiated a long once the Nifty started getting past 18,650 with a target of 18,775, 18,800. So today's gap up, I think, and closer to 18,800, which is the highest ever closing. Actually, technically, it's 18,812. Around that level, I think I would be, inclined to take profits and see whether we have the strength to get past 18,820 and sustain above that. And these are spot levels which I'm talking about. So broadly, I think, closer to 18,775, 800 zone, take some profits. Only if it starts getting past 18,820, then take a fresh long with another 50, 60 point kind of a stop loss and see if the breakout can succeed on the upside.
Okay, all right. Got that call, gentlemen, on the index. But Mitesh, tell us more with regard to your stock picks for today.
Yeah. Morning, Nigel. I have all buy calls today. Asian Paints is a buy with a stop at 3,200 for a target of around 3,400, slightly positional kind of a call. HDFC AMC is a buy as well. Keep a stop at 1952, look for targets of 2030. Gas Authority is a buy with a stop below 105.75 for targets of 111. And Chola Finance is a buy. Keep a stop below 1080, 1145 being the first trading target.
All right, that's on Chola Finance. Sudarshan, what about you?
Well, it's again mainly buy calls, starting with Balkrishna Industries, where a reasonable, decent bullish pattern is in the making. I think that pattern should break on the upside. So stop under 2240. Then the only intraday short I have is Concord. Concord is an intraday short. The stock has already started falling, suggesting that some kind of distribution has taken place. Stop above 667. Remember, keep it intraday. Short selling should always be done that. Only intra. Havells is a buying opportunity. After a big rally, Havells is in a trading range now. Now, normally after a rally, a trading range comes and the trading range breaks on the upside because the trend is intact. So Havells is a buy with a stop under 1329. And finally, Tata Power again comes in my list. It's in a very narrow, tight range, suggesting that a big move is coming. I'm assuming the big move will be up. Stop under 215.
Okay, thanks a lot for that. Well, have a good day, both of you. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, also joining in. Chandan, hi, good morning. Your thoughts on how to approach the index as well as individual stocks? What are you looking at?
Good morning, Sonia. We have seen good momentum in the market in last trading session. Major trend is intact to positive, and we have noticed that every small decline is being bought. Yesterday, Nifty index has formed a bullish belt hold candle where sustained buying interest was visible. However, the India VIX is near to 11, so because of that, major momentum is missing, but trend is intact and overall market is going to head to higher level. So we believe with support of 18,550, this leg of rally could extend to us new lifetime high of 18,888 and even a knock to us 19,000 marks. So one can continue to remain bullish in broader market in Nifty. If I look at the derivatives internal, the put call ratio again moving above 1. FI's long short ratio is near to 51%. Your lower volatility and rising put call ratio also indicating higher base, and fresh put writing started to seen at 18,700 strike. So we believe that for intraday even 18,676 could act as an immediate support. Now talking about Bank Nifty index, this index is holding the strength but has been consolidating the range from last 8 days. We have multiple support near to 43,750, and we believe that with this support, Bank Nifty has again potential to hit the new high to us 44,500 to 44,750 marks. Now looking at the stock wise, first that is buy on DLF. We have seen that Nifty Realty Index has seen the good momentum, and most of the real estate, whether FNO, non-FNO counter are on the roll. And here we are recommending to buy on DLF. This stock has given a decisive breakout above 500 zone. We have seen built up of long position along with put writing and call unwinding, giving the strength for up move. We are expecting 4 to 5% further rally. So one can buy with support of 492, and DLF has potential to head to us 525 plus zone. Second trading idea, that is buy on Chola Finance. The stock is continuously making higher to higher bottom on the weekly chart. Recently, it has given a consolidation breakout with decisive hold. Even longs are being added. And from last series to this series, we have seen decent built up on the long side with higher rollover activity. So recommending to buy with support of 1,080 for upside move to us 1155. Here one can trade with immediate ATM stock option buy for further momentum as well. Last trading idea, that is Asian Paint, that is the crude beneficiary counter, given a consolidation breakout about 3250. We are expecting now further run up in the stock towards 3400. So one can buy this stock as well with a stop loss of 3200 zone.
Okay, all right. Thanks a lot for that, Chandan. Well, we'll slip into a short break. You come back, we'll get the pre-opening rates. We'll also be joined by Abnish Roy, Executive Director at Nuvoma Institutional Equities. He'll discuss the consumption picture and how things are playing out. You stay with us. Welcome back. Well, as promised, let's get straight to our special Momentumizer segment. Ekta joins us to tell us about a stock that's been moving quite well. Ekta?
Thanks for that. Well, I'm looking at Laurus Labs. That's on my Momentumizer list. It is a part of the BSE 200 index. The stock did see a lot of volume and value action yesterday. For example, the stock was close to 5% higher in yesterday's trading session. It was the highest amount of volumes that it's traded since the 1st of June. Now, the stock, remember, has rallied around 29% from the 52-week low that it had hit on 28th of April earlier this year of 279 rupees. The stock is, however, still 40% away from the best levels that it's seen in the past 1 year. A couple of triggers. It was in focus on account of the export data. So for Q1, quarter till date came in at 38 million versus 138 million Q1Q. So a bit sluggish there mainly because of Paxlovid generic. Separately, the company was in focus because it increased stake in the cell and gene therapy company ImmunoAct. So it bought around 7.24% stake for 80 crores. Trigger going forward, the street will be watching for sustainable margin recovery, considering that the margins in Q4 came in lower than expectations at 20.7%, trading at around 18 to 19 times 1 year forward.
All right, Ekta, thanks a lot for that. So that's on the Momentumizers list, which is Laurus Labs. By the way, the pre-opening rates are kicking in right now, and it looks like it's going to be a positive start. The Nifty is up about 20 odd points, perhaps trying to build on to its gains from yesterday. And a lot of big movers, there's Tata Motors, Hindalco, HDFC Bank, ICICI Bank, that are all batting for the bulls this morning. There's also a bit of a recovery in the rupee this morning compared to where we closed yesterday, so don't lose sight of that as well. But at the US IBC 48th India Ideas Summit, Hari Bhartia, who's the founder and co-chairman at Jubilant Bhartia Group, in an exclusive conversation with Shireen, spoke about India's consumption story. He believes that the scope is unlimited for US brands in India. Listen in.
One reason of success is continuously bring value to the customer. If I look at our own journey in the last 10 years, I don't think we have actually increased prices, but what we have done is continuously leverage the scale to bring value. If you can give value, you will build scale. And today, it is the second largest in the world. When we started 25 years back, it looked quite difficult. The Indian consumption story is not in main cities only, in main large urban centers that we visit, but is now starting to see in district headquarters, in small towns. Consumers want great product, hygienic product, delivered at great value. So I think the scope is unlimited for US brands who are trying to enter India. Indian companies have set up huge capacities in India for supplying generics to US. Now, obviously, patient safety is topmost important. And now for that, compliance and quality is very, very critical. Now, I think it is important that the US FDA invests more on training people in India for building a resilient supply chain.
All right, let's get down to more on the consumption space because we've seen that entire pocket rise as well. Abneesh Roy, the Executive Director at Nuvama Institutional Equities, is joining us now to talk more about that. Abneesh, good morning and thanks for joining in. My first question for you is on HUL. Now, I ask because there are many positives that are perhaps expected to play through, the monsoon situation, the rural recovery, and there's a new management at the helm as well. Can you tell us what your outlook is on HUL?
Sure, thanks. We are positive on HUL more from a one-year perspective. We expect in FY24 gross margins to expand for most FMCG company, including HUL. For HUL, of course, the key raw materials will be crude linked, and we are seeing correction there. Yes, HUL has passed on some of that back to customer, but still gross margins will expand. This also means that HUL will have a balanced growth in FY24 because grammage additions are coming back in the lower unit packs. The affordability index is also positive for the customer. So we'll see a healthy balance for HUL in terms of volume, pricing, and overall EBITDA growth. Having said that, we do expect HUL's ad spends to go up, especially in Q1 and possibly in Q2. So from a medium-term perspective, we'll prefer ITC, Godrej Consumer, Britannia, Varun Beverages, and in discretionary space, we like Asian Paints and PVR and Trent. HUL will be more from a one-year perspective. Also, we are seeing premiumization very strongly in the liquids in terms of detergent and face wash, etc. But yes, it's more from a one-year perspective, we like HUL.
All right. Hi, Abneesh. Good morning. Abneesh, on ITC, what's the call? At 200, 300 rupees, there was value 350 rupees, or it's nearly 450. One gets a sense that maybe something's got to give. That long-awaited, some corporate action or something could be in the offing. We'll have to wait for that. But what's your call on the stock right now at around 450 rupees, and what's the target price you put out?
So we, in fact, have one of the highest target price on the street with around 500. Of course, in terms of the weightage within our consumer portfolio, also ITC has one of the highest weightage. Yes, this year, apart from market share gains, which legal industry will see, we will see margin expansion in their FMCG business, and in cigarette also, they will take calibrated price hike of 2 to 3%. Yes, we wait for the value unlock in hotel business, very likely in FY24. They have been doing the due diligence and all those necessary action for the hotel business value unlock. And in agri and paper also, we do expect that the margin expansion should also happen, especially in the paper business. So we remain positive. The next key monitorable in terms of negative for ITC could be the February 1st budget. But do note that this is an election year. So on February 1st, the union budget may not be a full-fledged budget. that gives more time for the legal industry to have a favorable taxation policy, which will lead to market share gains from the illegal industry, which is still around 22-23% of the industry. So we are positive. Dividend yield is also decent. But overall, I think the stock has done well. But from a one-year perspective, it should still do quite well.
You know, out of your coverage universe, in terms of absolute returns, Abneesh, if you had to pick one name, what would it be from here out over the next, say, a year, 2 years? Absolute upside.
Right. I think everything has rallied. So we had seen the FMCG index, in fact, around 2-3 quarters back, it was languishing because there was rampant FI selling. The gross margins were under pressure. Both of these are reversing. The rural slowdown also, which was an issue, that also, if you see, we are seeing green shoots emerge there. There is a record grain output also. But then we also do have to see the risk of El Nino. If I put all this together and see the valuation, my sense is from a 1 year, 2 year perspective, Asian Paints and Pidilite look the best because from a raw material perspective, gross margin should expand. And from a growth perspective, also these companies have demonstrated, Asian Paints in particular, that double-digit volume growth and double-digit EBITDA growth is something they can deliver. So from a 1 year, 2 year perspective, Asian Paint gives us high confidence.
Okay, one final question then, Abneesh, before we let you go. What's the outlook on Titan and some of the other retail stocks? I mean, Trent is sitting at a record high as we speak. Avenue Supermarts, how are the valuations looking? So in general, that entire pocket?
So in that pocket, Trent is the best. So the AGM, we released a report, also very strong addition in terms of store, in terms of Zudio, and in their west side also, we are seeing good pickup in stores and overall growth also. So clear market share gains is happening. In terms of Titan, yes, we remain positive. We'll prefer Trent over Titan from a near-term, medium-term perspective. But yes, those two will be our top picks. Currently, QSR still faces the gross margin pressure because of high dairy prices, cheese prices, and high competition. But within that space, Devyani, Sapphire are better. In that space, PVR also is looking interesting. Adipurush, strong initial numbers, very strong pricing also. And we are seeing strong content pipeline. So Trent and PVR are looking more interesting in the discretionary space.
Missed your call on Avenue Supermarts, DMart. In the last few days, it's coming back to life. Valuation-wise, it was very, very expensive. It became a little bit more moderate. What's the call right now on Avenue Supermarts?
So from a medium long-term perspective, great stock, compounding will continue, store addition, X of Maharashtra and Gujarat will remain strong. Last 2 years, because of very high discounting by the e-commerce grocery players, DMart also has seen a lot of pressure. Now, because of the other side, everyone is focusing on profitability. So DMart is also a favorite of the FII. So as FII buying comes in, that stock also should do well. It will not be in our pecking order in terms of the top three. But yes, what it has seen is the margin pressure because of the overall discounting from competition. That should start easing off. So DMart more of a longer term call. But we'll prefer Trent, PVR and Titan in that space over a DMart.
Okay. Abneesh, thanks a lot for that. Have a great day. Thanks for joining in. So we have the pre-opening rates which have settled in. Let's quickly get a handle on a couple of 9-10 calls as well. The Nifty is absolutely flat with a 30-point up move. Sudarshan and Mitesh are back with us. Sudarshan, what's the big call at 9-10?
Balkrishna Industries can be considered for buying with a stop under 2240.
And Mitesh, how about you?
I'll choose a buy on HDFC AMC, stop at 1952, targets of 2030.
Okay, that's HDFC AMC that Mitesh likes. Got it. Sanjeev Bhasin, in fact, who we spoke to earlier, was talking about how Maruti is one of his big stock ideas. He expects the stock to go to 12,000 rupees over the next 1 year or so. Now, the company has officially confirmed that it will be launching its upcoming premium multi-purpose vehicle called Invicto. The car is slated to be launched next month and the company will manufacture the vehicle in collaboration with Toyota Motors. Parikshit caught up with Shashank Srivastava, the executive director at Maruti, to take stock of the company's latest offerings. Take a look.
This is the first time that Maruti Suzuki will be coming into the 20 lakh plus price range. So this segment actually in the industry has been growing. And if you look at the price points, they have been increasing in the last few years. And the 20 lakh plus segment is now 5% of the industry. It used to be just 1% to 1.5% 2 years back. So I think we have decided to participate in this segment, and we are enthused by the fact that in the 10 to 15 lakh rupees category, which is 25% of the market, we have become market leaders there also. So while we dominate the less than 10 lakh rupee price range with 60% share, even in the 10 to 15 lakh bracket, we have become market leaders now in this month with 30% share. So we have decided, therefore, to get into this space as well, not just for volumes, but also that very positive brand imagery that it has on the other products as well.
Right. And just for our understanding, there was always a talk about collaboration with Toyota on SUVs. This will be based on the Hi-Cross platform?
Yes, it will. It is that vehicle, yes.
Right, sir. And as far as the manufacturing goes, where would it be produced?
At the Toyota plant in Bidadi.
Okay, sir. And would you be opening this up to exports as well?
Yeah, so those plans we will let you know at the time when we actually launch the product on the 5th. There's still some time, and we are finalizing our strategy, and definitely will give you more definitive answers when we launch the product on the 5th of July.
Okay, well, that is Maruti. You heard Sanjeev earlier talk about Maruti as being one of the top bets for him from here on. Mitesh is with us. There is just, 2 minutes to go for the market opening. And it's going to, as the pre-open indicates, it's going to be a decent one, about 28, 30 odd points higher. Mitesh, just a few names if you want to quickly do a rapid fire. Comment, if you will, on HBL Power. Last week was a 30% week. Monday, Tuesday has been great once again for this one. Macrotech, that is Lodha, saw a big surge in the last 30-40 minutes. Is there more to come here? And then something like a Oracle Financial Services, which out of the blue popped up big time. Go on.
Prashant, I'll start with Lodha developers or Macrotech developers. I think the stock peaked out at about 750, 770 zones way back in December of 21. I think it's hitting those levels again. But the overall pattern is so bullish that I think eventually it'll break above that. And then we can even look at targets of 900 to about 950. So very, very strong outlook over here. People can accumulate now, add-on declines. Oracle Finance is something which has also given a very good reversal. It's completing what I would call as a rounding formation, and I think it should therefore hit the target of 4,100 as a minimum. But once we see the stock get past those levels, then the rounding formation gives you a target in excess of 5,000. So again, extremely positive over here. These are the stocks which I'm covering. HBL Power, I have not looked at it.
All right. You just have about a minute, less than a minute actually, for the markets to open. Looks like it's going to be a positive opening. The Nifty is up about 30 odd points, and you have the sensex, which is up. Sensex actually a tad bit in the red. The mid caps are where all the action, all the party is, and that continues up about 100 points or so. Just watch out for a couple of stocks. Persistent Systems is one stock that JP Morgan has downgraded to an underweight with the target price of 4,100. So that stock perhaps could be under a bit of pressure today. In fact, JP Morgan reiterates its negative view on the entire IT sector. So, they say that in Q1 and Q2, the entire IT sector will disappoint the street. All right, here's the first tick on the index. Not bad, actually. After yesterday's very strong run, we're building on to our gains. The Nifty is up about 25 odd points. The Bank Nifty straight off the back is up about 100 points. And the mid-cap index is trending in the green, up about 90 odd points as well. Advance decline ratio is solid in favor of the advances at the moment. And the big moves are coming into the metal space this morning. So that's where the party is kicking in. Hindalco, JSW Steel, Tata Steel, all in the green. Eicher Motors is up about 0.6%. You have ONGC, Dr. Reddy's, Adani Enterprises, a couple of other stocks that are trending in the green right now. On the downside, SBI Life is under a bit of pressure. Bharti Airtel as well, down 0.4%. Cipla, BPCL, HUL, L&T are a couple of other names that are in the red right now. But the market, you'd have to say, is very quiet. The opening is positive, just trending on the green line, holding on to 18,730. In terms of individual stocks, Persistent Systems is down 1.5%. In fact, the entire IT space, as I was telling you, JP Morgan has reiterated its negative view across IT services. In fact, they have placed Infosys, TCS and Emphasis on a negative catalyst watch. So do keep an eye out on that. And this morning, you have Emphasis that's under pressure. Persistent Systems, KPIT Tech, all are under pressure at the moment. Tata Chemicals is another one, down 3.5%. Sonal was talking about that one. Devyani International is down 1.5%. CEAT is coming in for some profit taking. some of these, platform companies as well. But of course, Nigel will take all of that forward. In general, it is a market that's consolidating with a little bit of gain.
Well, that's right, Sonia. And in fact, we have a large trade that's taking place as well that's flashing for you on the screen. 5% equity changing hands in CDSL. So we'll keep an eye out on that. For the time being, that stock is down close to around 4%. Other big stocks reacting to news. You have KEC International, the bagged an order worth around 1,400 crores. The street likes that. That stock is opened up in the green. Vodafone Idea, the company, there's a proposal of some equity infusion. We need to verify these details out there. But that stock is up close to around 4%. And it could have a positive rub-off on Indus Towers as well. Because they stand to gain. A more stable Vodafone Idea is good news for them. So let's get that up for you on screen, up 2.5% as we speak. ZA Enterprises, yesterday did see a sharp slam dunk, but Plutus Wealth Management, they bought close to 75 lakh shares in the company at around 191. So that one is up and about in today's trading session. A few other stocks in the broader markets that deserve special mention. Soryodeya's small finance pack, the stock is up close to around 7%. But this week it's up more than 15%, so that's seen a good run. And Tanla as well as Electra Green Tech. But this week these stocks have still done well, and today they're building onto those gains. So yet again, the broader markets, the action's out there. More than 2,000 stocks advancing, but just 400 stocks that are declining.
All right, 20 points on the Nifty basically. I think we mentioned CDSL, right? CDSL, I think there is a block because volumes are through the roof. There you go, at the bottom of the screen, 4% lower. KPIT Tech is down 2%. Tata Chemicals is down 3%. Tata Chem, of course, I think this is the soda ash story playing out. Tata Chem yesterday closed at $1,000, now in 3 digits. Persistent, of course, there is the downgrade which we highlighted. HBL Power, we were just discussing with Mitesh earlier, down about 2%. This is, follow-through or lack of follow-through moves from yesterday. This JBM Auto has had a frenzied, feverish move last few days. That is starting down 1.5%. And I think HDFC AMC is down a little bit as well. By the way, market breadth in terms of overall advanced decline is pretty solid on the way up. Lodha is picking up from where we left off. And, Mitesh weighed in on this just before markets open. Another 4% on Lodha after yesterday's move. Stocks at about 703. KEC we mentioned with a 5% gain. Anupam Rasayan, 6%. Varun Beverages is coming up with about a 2.25% gain. APL Apollo is up about 3.33%. Cyient is up about 2.25%. I think with Cyient, this IAF, I think one of the brokers met the management, and there is some, I'm not sure if there is new guidance, but reiteration that there is, demand environment for them remains pretty solid and, good. So I think the stock reacting to that. Gland is up about 2.25% or so. And we've got Sula, which is up about 2% as well, 458 or so on Sula. So that's basically what you have on the index. The Nifty is not doing very much. You just got about 10 or 11 points with us at this point in time. But it's basically the mid-caps and small caps which are really have been the stars for a while. Names like Suzlon, Canara Bank, or etc. are seeing some profit booking as well. So it's both ways. Although, the bulk, the thrust is on the upside with many more stocks on the with gains as compared to those trading lower at this point in time. Okay, well, let's get a technical perspective, right? We are at all-time highs, almost there. But how's market looking? Is it good for more, or there will be some hesitation, some consolidation? Atul Suri is with us, Chief Executive Officer at Marathon Trends PMS. He's with us here in our studios as always. Atul, good to have you with us here. Thanks very much.
Thanks.
So you heard the question. What from here, basically?
See, I think, Prashant, it's just global in nature. It's not just that India is doing well. If you look at global markets, there's a massive repair job, and we've been talking about it. It's a lot of markets are almost breaking out of 52-week highs. Look at NASDAQ, that's driving. S&P 500, that's going there. Japan, doing pretty good. Kospi, Taiwan. So there is a whole host of markets, and this is a repair of the damage done last year. And this is global in nature, barring a few countries like Russia, etc. But this is global in nature. So India also is getting to new highs. The difference is that it's not just 52-week highs, they are lifetime highs.
Correct.
And that is a very, very big difference, because even if these markets are breaking out a 52-week high, they are good 10 to 15% from lifetime highs. So that really sort of reiterates the position of leadership that India has. We had this feeling of outperformance very early in the year, but then after that, due to some events, the luster was lost. But the good part is that India has recovered. And it will again be one of the first few markets to break out to lifetime highs. And there's a lot of difference between lifetime highs and 52-week highs. Lifetime highs means that there are no resistances, there are blue skies. So I think that India is getting there, and I still feel that we have about a good 15% upside from where we are. And I think that, a lot of people are sitting in cash, and I've been saying that for quite some time that please be invested. Top up if you have to, because I think that this is a global repair that's happening in equities after a big pain last year.
A lot of people one speaks to are still in a state of,
absolute
bit of a disbelief, right?
Yes.
Markets don't top out when you're in that kind of a state.
Famous line by Soros, bull markets are built on walls of worries. And that is very, very true. And see, where is the froth here? Where are the excesses happening? There are no excesses. Do we have that GameStop kind of scene last year? Do we have those SPAC kind of situations? We don't have any of those
Maybe
kind
in single stocks in mid caps and small caps, but that always happens, and then they get corrected themselves.
There are a lot of people for whom that is their profession and their bread and butter, but it's not the market as a whole. And that is why you'll find that the angst was a month ago was, hey, this is just very limited to few stocks, few sectors driving. Hey, but look at today or look at last week. The breadth is really improving. And that's, I think, very important. So no euphoria is actually good. But personally, I'm extremely bullish. And I think that India has really, really, pounded up on the table and said, hey, this is leadership status. So as an investor in India, why should you not be in equities?
Okay, that is the most bullish I've heard you in a while, actually.
No, I've always been.
More bullish than last time you came here.
Okay,
what has changed since then? You changed your diet or something?
No.
But 15% upside is big, right? Given the rally that we've seen up until now.
Sonia, I've been saying that, not that I just don't want to talk about the past, but, like I said, 21,500. I've been on record saying that since, and it got a little messy post that whole Adani issue, etc. But I think that India is heading there, and we are showing absolute character, breadth, leadership, all these things are there. So I, for one, have fully invested. I don't even have 1% cash. Let's be honest.
And where are the leaders now? Traditionally, it's always been banks so far, right? IT has been underperforming.
Absolutely.
Do you think things could change?
No. So what we did was we realized that, hey, you know what? The sector indices that are constructed are very poor.
Yeah.
I'll give you an example. The best performing theme playing out today is defense. Right? But we don't have a sector. It is somewhere in the PSU basket. Yeah. So what we did was we created about 40 thematic sector indexes. So clearly there are 4 or 5 very big themes playing out in this market. Why I point out defense is that defense is not just doing well this year, it was also one of the best performing last year. Yeah. And the numbers are supporting it. So what you see, as a trend follower, there is a very, very big play happening in defense stocks. Second is not a very glamorous sector. It's your electrical equipments. Again, cap goods is a very big universe. But if you look at some of the electric equipment manufacturers, you'll find they're coming out with very good numbers. What has happened is that over the last 8 to 10 years, a lot of companies in these sectors have been wiped out. And what is left is a handful of them. So when the government orders are coming, the push on infra is coming, you'll find that these guys are disproportionate beneficiaries. They are all screaming away at lifetime highs. Similarly, you'll find in construction, infra, they have not moved for a decade. Yep. They are under-owned, under-loved. So these actually become very good themes for larger trends. And that's why we personally prefer to be overweight here. Those which were leaders 2 years, 3 years, they are famous names, they are marquee names, they're so-called quality. But you'll find that they don't have trends right now. The trends have moved. Hotel stocks, that's another very, very interesting place. When did hotels take leadership status? Even in auto, I think auto is a very interesting sector. But more interesting is the whole ancillary space, where there are some of the electric plays that are playing out. So to thematically look at the market, I feel that there's immense leadership. You will notice it in breadth. It may not get reflected in the index per se, but there is a lot of trends playing out.
There's a party going on in the broader markets, Atul, and if you're participating, good on you. And as you're saying that you're not sitting on any cash, so fully invested. Just want a time frame, this 21,500. How long could it take?
I think the markets will surprise on the upside, because I think globally, I feel that markets will surprise, and I wouldn't be surprised by the end of this calendar year. So that's just 6 months, which is very big, because the big issue that is happening, what I am really seeing is the cooling off of commodities. See, our biggest but last year, what was the problem last year? If you find that all asset classes were negative in 22, except one, commodities. And 23 is just the opposite. All asset classes, whether it is equities, whether it is bond prices, whether it is even cryptos. There's only one asset class that's negative, and that is commodities.
So let's talk more about commodities. Crude prices, where is it headed?
I think they are headed much, much lower. And I think that crude actually is one of the most manipulated assets in the world. It is a pure political play, a play of egos. And crude, in spite of all attempts by Saudi, if you look at it, they're doing everything. They're almost like a one-man show in OPEC Plus, trying everything to cut production unilaterally and go ahead.
Yeah.
But you will find that crude is still not going up. The day they do it, it goes up $5. But a week later, it makes a new low.
Yeah.
So essentially, this asset class is telling you it wants to go lower. My target for crude is around 65. That's Brent crude. And I think that will have very, very wide reflection on world economics, because it has created chaos and mayhem. I mean, if you look at our neighbors, you look at Pakistan, Sri Lanka, a lot of African countries, these countries have been destabilized thanks to this crude prices. So I feel that commodities per se, which is one of the biggest cause of inflation, fear of inflation, which led to higher rates, which really created the mayhem in equities. I think if commodities remain cool, which I think they do, that's what they seem to me right now, I feel that this will be positive for equities and economies as a whole.
As you mentioned, electrical companies. We got a company joining us in just a bit. KEI will be with us, and that'll be interesting.
Disclaimer: it's a part of my portfolio.
That's done phenomenally well. I mean, over a period of time.
You want to share some more portfolio?
No. Just that he said it. Better be safe.
We should have a tease up. So, I mean, what else? Real estate still looking.
Real estate, Prashant, has its bits and pieces. But at the end of the day, when I talk about trends, I'm talking about a 1, 2, 3 year kind of up move that there is happening. So real estate has been very good, probably the best performing in the last 3 months. But by my standards of qualification, it's still not there. Like I am extremely overweight defense, electrical equipments, engineering, infra plays. I know these are the areas that I am, because what we call the old economy. As I said, it is perfect setup. You don't do anything for a decade. You're under-owned. Even at the corporate level, very few players. My models are telling me that, hey, you know what? That the whole cycle is turning, the whole infra, the whole capex circle. I'm not an economist, but we have to hear what our models tell us. My models are clearly telling me that things are turning around in this place. And if they do, I feel that these guys are going to be disproportionate beneficiaries. And it's showing in the quarterly numbers to confirm. It's not just storytelling.
I know you have been a big bull on autos for a very long time. It's played out beautifully, right? But what next? Is there more upsides in the auto stocks? Or have people missed out on the rally?
Yeah, and even in that, Sonia, as I was telling Prashant, that autos is one. We know these famous 5, 7, 10 names. But look at ancillaries. Yeah. I think ancillaries is a very exciting place. You know why? Because of the electric focus. Yeah. Whichever, even if you see some of the companies, you mentioned some, like these are part of our portfolio, because we find that wherever there is an electric slant or a move towards electric mobility, I think that is doing very well. So auto ancillaries is a very big basket, maybe a few hundred stocks. You can't have that. But even in that, look at the electric angle. I think that theme is playing out, and not just India. Again, it's happening globally.
So you're not looking at the auto OEMs. You feel that that's an overcrowded trade now?
I feel so.
M&Ms,
and I think
Tata Motors of the world?
Yeah, I mean, they will do well. But at the end of the day, my job is to create alpha. And, to look for that alpha, I would look at those niches or those specific trends. As I said, there are a few hundred stocks. At the end of the day, how many auto stocks can I have? So I would rather go into ancillaries. And in ancillaries also, I would look at the electric side of it. I think that you can see it. The market, the screen is telling you that they're doing very, very well.
And Atul, what about the IT index? The IT stocks, they've been fairly stable. They're not corrected much.
In fact, they've been disastrous. The large cap IT is one of the biggest drags on the Nifty.
Yeah, they haven't moved much is what I meant. And NASDAQ is up close to 30%, in the recent past. What's the view out there? If they've been disastrous, do you see some downside risk on the IT stocks? Because that's a large part of the index, the Nifty.
Yeah, they have been one of the biggest drags. Because if you look at banking, which is in sector number 1, it's almost at lifetime highs. Yeah. It's pretty much keeping in step with the market as a whole.
True.
But IT large cap is actually one of the biggest drags on the market. And even when you look at NASDAQ, you'll realize that, hey, it's not the breadth in the NASDAQ that's playing out. It is, again, just as I mentioned, electric and autos.
The top 6.
In tech also, it is AI. Yeah. Right? So even in the Indian market, you'll find that there are some companies, some mid-caps doing very, very well.
Yeah.
So you really have to, as I said, look at themes that are playing out. And once you get these themes, I think that's when the big trends play out. So even in tech, it's the whole AI thing that is really playing out. And that's changing lives very, very fast.
Okay, forget all this. It's season time. Where are you traveling now?
Oh, okay. Yeah, this time I'm doing something adventure. I'm going to Ladakh, actually. I'm going to hike. I'm going to Ladakh. So that's going to be a 9-day trek.
Is it your first time in Ladakh?
Yeah, absolutely. So, we are a largish group and I'm the kind of organizer. So that increases the pressure.
I was reading somewhere that they're actually now opening that places which were inaccessible.
Yes, the China border, because north of Pangong was actually restricted area, and that's when the China border. So now they've started tourists to go north of Pangong. Right. Pangong, of course, is that very famous, beautiful lake. Must do photo op kind of things, I think 3 Idiots was the movie where, that's what made it famous. But north of Pangong was restricted because that's when.
All right. Have a fantastic holiday.
Have a safe one, actually.
Oh, yeah, I know.
That will be a tough one for you.
Fingers crossed.
Thanks very much.
Thanks a lot.
That's technicals, 15% more to go as far as the Nifty is concerned. And, broader markets and these specific sectors is what you need to be focused on, as Atul explained. The Nifty is absolutely flat, just 4 points or so. Let's actually focus on one stock, CDSL, where there was that block that we put out. Nimesh is standing by. He's got details on what went on, who sold, who bought, and what's the behind the sort of story, the backstory for this block deal. Nimesh, over to you.
Hi, Prashant. So today's large block in CDSL was largely done by BSE, Bombay Stock Exchange. So they own 20% stake in CDSL, and today via block deal they have sold 5% stake. So the entire transaction is close to 550 odd crores, and after this transaction, BSE will continue to hold 15% stake. I have a confirmation as well that yes, Bombay Stock Exchange did sell the 5% stake in CDSL. In terms of buyers, I guess it's a mix of both domestic and FIs who've participated in the block deal. Some hedge funds have also bought, is what I understand. I believe this 5% stake in which BSE has sold is largely a regulatory requirement which they wanted to do before October of this year, and hence they've sold this 5% stake. Not sure what's the plan going to be for BSE going forward with the remaining 15% stake, but the fact is that I guess the street will like the fact that BSE has now started monetizing its stake in CDSL. Remember, for a long time they've been holding 20% stake, but that was not given any value as such because it was a holding stock. Now that they've sold 5%, I guess street will start penciling some numbers to that stake still as well. As things stand, final confirmation that yes, BSE has sold 5% in CDSL today via block deal, and a couple of domestic funds and some hedge funds were buyers in today's block.
Okay, all right. Thanks a lot for that. Nimesh, BSE actually is the stock that you should be looking at. CDSL is under some pressure, but BSE, that's the one that's going to be getting the money because they have sold some stake. In a short while from now, that stock should be up for you on the screen. I think there'll be a positive reaction on that one. Well, that'll come up for you on the screen, though CDSL is under some pressure. Well, let's move on then. KEI Industries, that's a stock on our radar. The company reported a decent set of numbers in Q4. They are guiding for 16 to 17% revenue growth for the coming year. To discuss how demand's outlook is shaping up and how's the order pipeline as well looking, we have Mr. Anil Gupta, the Chairman and MD of the company, who joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, you had guided for around 16 to around 17%, and that's pretty good. But given the fall in commodity prices, there could be some tapering off in terms of prices. Do you still stick to this revenue growth of 16 to around 17%? And if that's the case, then will you be factoring in higher volumes than you factored in earlier because pricing has come down a little bit?
Good morning, Nigel. I guided for 16 to 17% revenue growth based on certain, price levels persisting at the end of Q4. Now, if the price, but we are still sure that we will be able to maintain a volume growth of 16 to 17%. If the prices goes down considerably, then we are more concerned about the volume growth instead of that just the value growth and also margins. So our effort will be to maintain the volume growth and the EBITDA. That will be.
Okay, Mr. Gupta, so pricing has come under some pressure because the input costs have cooled off. So volumes you're guiding for around 16 to 17%, but on the revenue growth, could you give us the number given the softening we're seeing at prices at current reckoning? What kind of a value growth would it mean? And also lower input costs and operating leverage will be good news for margins. What is the margin number you're looking at?
See, at the current level of prices, I still see a revenue growth of 15 to 17%. We should be able to achieve. So far as margins are concerned, our guidance will be anywhere between 10.5 to 11%, because so far as lowering of the raw material prices are concerned, but we always have inventory in the retail stock, and we always have booked orders, and we always have competition. So we are a little conservative in giving guidance, but definitely we'll try to achieve 11% EBITDA in this year.
Okay, 11% EBITDA in terms of margins this year is something that you can achieve. You also have a major greenfield expansion of 800 crores, Mr. Gupta. And first of all, welcome to the show. Thanks for joining in. There's an 800 crore expansion that you're looking at. Tell us a little bit about that in terms of a timeline, execution, and also what is the revenue potential from here?
This expansion will be anywhere between 800 to 1,000 crore. It is coming in Gujarat, in Sanand industrial area of GIDC, where we have already procured the land, and construction activities are likely to start in July. It is still at the planning stage for the architectural point of view, and envisages a turnover of around 4,000 crore over 3 to 4 years from after it is operational after 2 years. Then it will give a revenue of around 4,000 crore a year, but in a graded manner over a period of 2 years. And then by debottlenecking, it can go up further to 5,000 crore. It will be a mix of cable, HT cable and low tension cables.
Okay, so you're saying 2 years down the line. So maybe from FY27 is when you're expecting a 4,000 crore annual revenue from this greenfield project?
I think it will be an FY, 24. No, FY26. It should start.
Okay, got that. And in your EHV segment, there was a degrowth in revenues of almost 25%. You had spoken about some delays in large orders. Can you tell us what is the status currently? I think your order book is about 850 crores. If there was a degrowth earlier, do you think those orders will get executed in the subsequent quarters? And what could the quantum look like?
Certainly, it will be executed in this year. And there is a good, order pipeline in extra high voltage cables. And we expect a revenue of more than somewhere around 600 to 650 crore in this segment. In this financial year, we have a good order book and good pipeline.
Mr. Gupta, just to kind of put that number into context, so you buy, what will the total size of the business be by, say, FY26, sir?
I think by FY26, we should reach around, 10,000 to 11,000 crore rupees. But once this Sanand plant starts, then it will be a major pickup. And because we are focusing on major exports from there, because at the moment we have a lot of export opportunities, but we are not able to build it up because of the capacity constraints. We are hyping up our capacity in our existing plants by debottlenecking and by doing brownfield expansions. And from that, we will get around 15% revenue growth year after year, this year as well as next year.
So you ended with about 7,000 crores in FY23. You're saying by FY26, post the revenue from this new Sanand facility, you'll go up to about 11,000 crores. Should be round about there.
11 to first year 11,000 crore, and then gradually scaling up that facility.
Okay, got it. Mr. Gupta, just to step back a little bit, I wanted to understand from you, what is the big, which business segment is the big opportunity going to come from for you? Because globally, what one is reading is that the main problem, right? I mean, if we're going to see a lot more renewable capacity being set up, coal-based plants, etc., take a backseat, the big sort of not problem, but the delay is in getting the power from these renewable plants to homes where the power is needed. And that requires grids, and that requires cables, because these are not, you need to replace one coal power plant. You need, you need more than a few renewable units, be it wind or solar or whatever. And these are usually located not in the center, but slightly away because you need a lot of land. So connectivity requires a lot more grid, and that requires cables. Is that something which we will see here in India as well? Is that already happening? Could you give us an update?
Of course, this is happening, and the major cable requirement is coming from solar power plant and also from the power distribution side. A lot of distribution strengthening is being undertaken by all the power distribution companies. Apart from power, we see a good demand coming up from industrial sector, refineries, steel, cement, and also the infrastructure like railways, like metro railways and suburban trains. Then construction sector is also picking up, and we are seeing a good demand coming up from that. In overseas sector, it is the solar power which is driving the growth, and also the power sector. A lot of cables are needed overseas also in the power sector, especially in America in the infrastructure rebuild.
Okay, all right. So the theme is looking up. KEI Industries is headed in the right direction. Mr. Gupta, I wanted to ask you about pricing. Now, on the retail-facing business, on the retail side of things, I understand that your pricing is at a bit of a discount in comparison to your peers. You could correct me out there. And you could tell me, what is the strategy from here on? Do you look to bridge that gap? Because on the margins, you're looking to bridge that gap. Margins as well are relatively lower. So on pricing, what is your strategy from here on? That, and also exports, as a percentage of your revenues, I think they're in early teens. Where do you see this number headed?
So first of all, margins in the retail side, we are trying to improve our margins by approximately 1% in our house wires every year after year. And so that will bridge the gap between our peers in next 3-4 years. Regarding exports, what was your question about exports?
On exports, it's around 10 to 12%, I think, right? As of now. So where do you see this number headed? Given that you're saying from 7,000 crores, you'll go to 11,000 crores. So what will the contribution be from exports? And also, sir, you have commented on margins, but on pricing, you've not commented. Will you continue to remain at a bit of a discount in comparison to your peers?
For 1 or 2 years, yes, until we come up as a brand to the same level. And so we'll definitely bridge the margins. And in the exports, we expect that this year we expect to reach 12% of our sales from exports. And going forward, as we are able to build up our capacity, we aim to achieve 18 to 20% coming out of exports of the total turnover once our Sanand Ahmedabad plant starts.
I also want to understand, because there's so much focus on the railways, right? And the government is speeding up their order wins over their order execution there as well. Can you quantify the opportunity that you are getting from railways and rural electrification?
Railways, major opportunity is from, platform rejig, then secondly, the suburban trains and metro rails. So far as mainline railways are concerned, most of the electrification is done by overhead traction. So the cabling demand per se is not very big, except signaling cables, which goes up in that. So that's about railways.
Okay. All right. Sir, thanks a lot for joining in, and have a great, FY24. Your stock has given very good returns in the last 12 months. The stock is up almost 80%. Been a big wealth creator, and management is quite confident that the business will continue to generate good results. Let's slip into a quick break. On the other side of the break, one of the other big mid-cap movers has been Raymond. Amit Agarwal, Group Financial Officer at Raymond, will be joining in to discuss the business and demand outlook. We will also connect with Ramesh Srinivasan, who's the Managing Director and Chief Executive Officer at Kotak Investment Banking, to discuss major trends in the M&A space. Stay tuned. Welcome back. Well, Raymond has been one of the big winners in the last 1 year, surging 90%. Among the small caps, has delivered the highest return since March 31st this year. Amit Agarwal, the Group Chief Financial Officer at Raymond, is joining us now to discuss their business outlook and how the demand situation is shaping up. In fact, you just saw that 12-month chart of Raymond, and you'll get to see the kind of returns that Raymond has generated. Amit, thanks a lot for joining in. Your last time when we spoke to you, you had mentioned that the demand situation was a bit muted, especially in the month of April and May. What have you seen since then? Has there been a pickup in demand? And if yes, across which geographies are you seeing a pickup? Where are you, planning to expand in terms of your store addition as well? If you can just give us a sense of what the next 1 year may look like.
Yeah, thank you for having me on the show. No, it has been a very good run for us. If you look at it, 22-23, we have recorded the highest revenue, highest profitability, and all of our business sectors have done very well, be it the lifestyle, be it the real estate, which we grew the business very recently. Now, coming to the current situation, you look the business across in the lifestyle. I think April, May had been a little muted because of the weaker demand. But still, if I look at the urban sector, at the sector in the tier 1 and tier 2, we have seen still a decent growth coming in. Now, the question is about the tier 4, 5, 6, which has generally the summer weddings, which has seen a little muted. And we expect that hopefully in the next 10 to 12 days, we see a slight improvement. But then after that, the monsoon, when it kicks in, then there is always a dull season for us. But we expect the festivities, which we should start delivering our products to our customers, franchisees, and so on from the mid to late August. I see a very good demand coming up because there's a good festivities around in October, November, as well as in weddings.
Sure. Can you give us, a little bit of more perspective or some numbers as well? You said that there are 200 stores that you're opening to focus on the ethnic business. This is what you said last time around, and 50% of these stores will have ethnic wear. Can you tell us, and of course this business, as we know, has high gross margins as well. What kind of revenue potential do you see from these 200 stores? And in terms of margins as well, what could you generate?
So look, we are very clear that in the last year, 22-23, we have opened almost 65 stores. And this year, we plan to open more than 150 to 200 stores in the current year for the ethnic wear. We have also the plans for other formats, be the Park Avenue and such things. In this stores, because you have a certain stability time, you take a time to mature these stores. So we expect anything between 12 to 18 months to mature these stores. And the seasonal pick is very important. When the festivities come, when the weddings come. So we expect when it is at 12 to 18 months, we expect anything, the revenue coming out of these stores between 1.7 to 2 crores per store. So that's a kind of a revenue per store we are targeting to grow.
Amit, what should the total revenue from ethnics look like? You gave us per store, but what should the number look like? Yeah, what was it, say, in the last year? And where is the number headed? Because you clearly believe there is big potential out there.
Yeah, so we had a very small revenue, around 70 crores in the last year. And we are targeting over the next 3 years to go anything between 400 to 450 crores.
Okay, all right. Amit, the other piece of the pie has been the real estate part. I recall a lot of investors were very disappointed when you'll say, hey, we're going to go ahead and develop it ourselves. But you've proved everyone wrong, actually. You'll have managed on the delivery. There's been good traction on ground as well. So kudos to you and the team on that front. But what's the way ahead from here on? On the real estate part itself, what could the sales volumes be or sales value be, say, for FY24 and FY25? And also, I just wanted to clear the air. What is the total, acreage that you have? How much of it is under development? And how much of it are you looking to develop or maybe sell out?
Good. No, thank you very much. I think real estate has been a very good area. And you see, I think we have come from a very different mindset. Because we have been a manufacturer and a brand player, so we come from that background where we believe very strong execution and the sales velocity. And to give you the perspective, in the first 2 projects, as we speak today, we have sold 80% of our total inventory. And if I look at it, the last year, we delivered a revenue of almost 1,000 plus crores on the reality side. And we have booked almost 1,700 crore worth of flat bookings have been done, which reflects very clearly that going forward, we will grow the revenues. Now, as far as the acreage is concerned, we have got currently under development almost 30 acres, and we still have 60 acres left to develop, which would translate anything between 8 to 9 million square feet. However, the journey is not just a monetization of the Raymond Thane land. It is beyond that. We have started already on the JTA project. One of the JTA project which we have signed in Bandra East is going to start over the next 6 months. in terms of the construction as we are working on the approvals. And we are getting a lot of good response from various partners who would like us to join them in a JDA development, which will be the big growth engine for our real estate business. So we look very clearly that in the 3 to 5 years, it is a very large business for us. And therefore, if you see, we have done also the demerger of the business of lifestyle and making a pure play listed entities for real estate as well.
So Amit, can you help us with a number? I think 3,800 crores is the total booking value that you've already generated. Sitting on this base, what can you do in the next 1 year? Over the next 1 to 2 years, what could the growth be?
I'm not going to give a guidance of 1 to 2 years, but I think over the next 3 to 4 years, we are expecting anything between 4,000 crores of revenue coming in from the real estate business.
And by when do we see 2 listed entities?
So I think we have already announced the demerger. We have already filed the papers for the stock exchanges and such things. It's a process and it is expected to be completed in the next 10 to 11 months. However, the demerger would be effective from 1st April 2023. So this particular year, you will have 2 listed entities, separate listed pure play net debt free companies.
All right. Good luck with that. Amit, thanks very much for that conversation and always appreciate it here on CNBC-TV18. That's the management of Raymond. I mean, the stock is the market's absolutely flat right now. Blinking red and green, 18,715 is where we're at. But market breadth is still very positive. 1,250 stocks are higher, and you got about 800 stocks which actually are in the red at this point in time. Now, with the market looking so buoyant, will investment banking activity pick up a great deal? That's basically the question that we are going to be asking. And this is an exclusive conversation with Ramesh Srinivasan, Managing Director and Chief Executive Officer at Kotak Investment Banking. He's with us right now. Ramesh, good morning. Great to have you with us here. Thanks very much for your time. Is this, just give us a sense of how give us a sense in terms of numbers, Ramesh, how this year has been panning out in terms of blocks and investment banking activity. What is this looking as compared to the previous year? And 2, will we see a lot more blocks, lot more monetization with markets and stock values at pretty much all-time highs in a lot of companies and a lot of businesses? Go on.
And I'll put this in context. So we had a muted first quarter of CY23. I'll start with capital markets. And then we saw 2 reasonably large IPOs, one from Mankind, the other from Nexus. Both received good subscription, traded up well. In general, that's good for primary markets. Additionally, if you take the last 3 to 4 months, particularly from March, we have been seeing close to $1 billion of sell downs, both by promoters and financial investors, $1 billion on an average every month. So that's also kept the markets active. In my judgment, first talking about the outlook and the primary markets, I think companies which have demonstrated profitability track record have got good growth prospects. I actually think there is a window available for them to get listed. However, I will caution that investors are expecting healthy discounts, so that has to be kept in mind. And I expect the sell-down activity to continue to be quite robust. This is the question you asked. Many institutional investors, both local and global, are actually preferring to stay with companies with listed track record as opposed to new IPO bets. And if you look at the sell-down of close to $6 billion that's happened in the first 5 to 6 months of this year, 1.7 billion have come from promoters who have done the offer for sale to meet their minimum public shareholding or delever themselves, and the balance have actually come from financial investors. I want to underscore the point of sell down by financial investors. This is important on 2 counts. One, this is also building to the liquidity of the capital markets on these stocks, which is very critical for a great market. And secondly, to the extent that they're able to divest and gradually monetize their holding, it also spurs them to do more investments. So in a general way, if you notice, this is pretty much the trend that we see. I expect, I'll just take a second more, a little longish answer. Please bear with me. I also expect QIP issuances to happen maybe post the elections, some of it maybe before. But if you recall, 2020 witnessed a record boom in QIP issuances on the financial sector. And in addition to the financial sector, I expect real estate, consumer, healthcare, and infra to be active as far as the primary markets and general sell downs are continuing. And last but not the least, I was looking at the data for calendar 22 to today, and 26 of the 35 IPOs are in the green, giving returns to investors, which is very critical for a robust market. So all in all, I expect that it's going to be a gradual uptake. There's a lot of documents which have been cleared waiting to happen. And as we see the bottoming of the rate cycle and people get comfortable, new money will also come into IPOs.
Okay, since you said the word IPO a couple of times, I just want to take that discussion forward. There's been some good success up until now this year, right? There's the Mankind IPO, you had the Nexus REIT as well. Do you see a big primary market revival? And if yes, what could the quantum look like in this year for the rest of the calendar year? And, where are your sights set now?
So I would answer this in the following way, that Mankind, Nexus, and a few other IPOs were necessary catalysts, but probably not sufficient catalysts for a runaway primary market. So I expect a gradual uptake to happen. In fact, you will see some IPOs are already starting to get announced. So they'll be in diverse sectors. So we see an active market much better than last year. But if you ask me, will it be like 21, a runaway market? Not yet. I think we are some time away from that. And it will be across diverse sectors. And over the next 1 to 2 years, we also think another trend that you will witness is many of the companies going public will also get new money as opposed to just offer for sale. So it will be a steady uptake, but not a runaway primary market that we may see in the coming 1 to 2 years.
All right. Morning, Mr. Ramesh. Nigel on this side. Since you mentioned 2021, the last time this IPO market got garam, so to call it, we had all these new age companies that came in there. And then, in fact, we had a bit of a drawdown on the index as well as on a lot of stocks. I just wanted your view on this new age companies. Is there interest being seen now? Some of them have come off half. Some of them are a third of what they were. Any view on them?
Actually, in the sell down that we expect to see over the next 1 year, my view is that, from growth, which was the theme in 21, investors and the markets have shifted their focus to profitable growth. So in the new age internet companies which have some paths to profitability have a game plan. In the sell down that you expect to see in these companies that got listed, you are likely to see good investor interest in the sell down that happens. And if I may just shift the conversation from the listed internet space to a little bit to the unlisted space, well, on the surface, it appears that there's a lull. Actually, there's a reasonable amount of action going on in the internet companies in general. I think companies which have got efficient capital, don't have too many shareholder complexities to resolve, are companies that are likely to succeed. Secondly, we are also witnessing conversations on M&A, particularly in the mid-market space in these companies, because they're all looking at how best to consolidate and survive. Secondly, companies have also realized that, look, they have to get a clear path to profitability. So they are working game plans to shed their SG&A fat. The other trend that is very interesting that we should all watch out for is that over the next 1 to 2 years, I expect B2B models to get listed. It'll be interesting to see how markets receive them, how well they do, and how do they get value. So all in all, I would say that in the internet space, below the lull, there is a reasonable amount of activity going on, both on the listed as well as on the internet, on the unlisted space.
Just news from overnight, Ramesh, that out of Europe, there is a new 4-week-old AI startup, which has got 100 million euros in funding. The largest amount of seed funding in Europe. Will be any AI companies in the pipeline here?
I think there are early stage AI conversations going on. So you will see next year or so that they'll all get funding, clearly even from India or Indian origin.
Okay, got it. Just one more point. I don't know if you have a view, because you speak with investors of all hues and shades. This entire ditching China and looking outside. We kind of highlighted this, I remember, last year. But one is starting to hear a lot more around this. I mean, Sequoia, I think there was one other large fund. But is that something you hear quite a bit as well? And so we'll see those investors coming both in the primary and secondary markets?
So, I won't comment on anything specific, but I'll say that if you look at from a secondary market perspective, Jan, Feb, March, there was a reasonable amount of China trade because the valuations were very attractive. India, continuing to be an attractive destination, but investors have always commented that the valuations are always a bit stretched. So I would say that if you look at, in context, the China trade today over a few months back, probably the interest has slackened a little. If you look at the FDI inflows into India in recent months and recent weeks, it's been robust. So with the sell down, the IPOs and the interest that FDI investors are showing, I think that's keeping the market stable. So really, that's the context on which we should view the question that you've asked on China versus India.
All right, we'll leave it at that, Ramesh. Thanks a lot for joining in. Appreciate your thoughts. Well, let's do one thing. Let's slip into a quick break. The market is very flat. There's nothing much that's happening right now on the headline index, at least. The Nifty is just hanging on to 18,700 by the skin of its teeth, and the mid-cap index is very quiet as well. Mitesh Thakkar will be back with us on the other side for some technical trades, and we will also talk about some stocks that are in focus. Persistent Systems has seen a downgrade from JP Morgan. More on that in a bit.
Okay, welcome back. We got the market, which is flattish, 10 points lower, 18,707 on the Nifty. But broader markets, there is still a fair bit of activity, and advances to decline ratio is in favor of gainers. Mitesh is with us with a quick check on things. Mitesh, hi. Morning again. On the Nifty, what's the call now, and will we see any large action today? Or you think it'll be quiet because, later we got a big event, which is the Fed decision, and your trades now?
I think, talked about taking profits on the rally close at about 18,800, and we got a high of around 18,755. But what we have done is that, given the fact that the Bank Nifty is looking marginally weak, we have traded our stop losses to about 18,675 on the Nifty spot. So, let's hope it doesn't get triggered. We also slightly overbought on the daily charts now, so I'm mildly worried. But I think, only now about 18,820 will I go aggressively long on the indices. But on the stock side, still trading with long bias. I have a buy on Vedanta. In fact, the metal index is recording a very good breakout. Vedanta has given a good, price volume action on the first hour chart. That's a buy with a stop just below levels of 277. Look for targets of around 295 here. And the second one is JSW Steel. Disclaimer that we have some call options positions over here, so I have a vested interest. That's a buy with a stop below levels of 760 for targets of 805.
Okay, by the way, the real estate space is once again on fire. So you have something like a Puravankara, which is up 5.5%, and so many real estate stocks actually doing well. But what I'm also looking at this morning, and Mitesh, thanks a lot actually for joining in and giving us those stock ideas. On the downside today, you have Persistent Systems that's under pressure, and we've been talking about that ad nauseum through the morning. JP Morgan has downgraded Persistent Systems to an underweight. They have a target price of 4,100, which is a big downside to where the current market price is. Now, they say they've in fact cut the FY24 earnings estimates by 3%. They've cut FY26 earnings estimates by 4%. They're saying that there are revenue cuts expected. There is higher exposure to discretionary spending, and they feel that clients could either cut down on discretionary spending or defer their expenses, and that could hit Persistent Systems quite a bit. In fact, overall, they are quite, negative on the IT sector. Their view is that every IT company will disappoint in the second half of this fiscal in terms of growth parameters, and they're placing emphasis, TCS and emphasis on a negative catalyst watch. So overall, they are negative on the sector, and particularly on Persistent Systems, they've downgraded the stock.
All right. Ekta is now standing by with details on Ipca Laboratories and why that is in focus. Ekta, over to you.
Hi, thanks for that. Well, yes, interestingly, Ipca's Ratlam facility, which basically manufactures API, was inspected by the US FDA from June 5th to June 13th and has been issued 11 observations by the US FDA. Now, remember that this particular plant, along with two of their other facilities, which is basically their Piparia facility, Pithampur facility, and now the Ratlam facility, they all have been under import alert since 2015 for Ipca Labs. So they haven't really been manufacturing for the US markets from these facilities since 2015. Now, just recently, their Piparia facility, which is in Silvassa, was inspected from the 18th to 26th of April. They were issued 3 observations at that point in time. That particular plant manufactures formulations. 11 observations generally means that, a facility which already has regulatory issues such as an import alert, and over that 11 observations doesn't read too well. The assumption is that it's probably going to take a longer time to solve for the company and probably even lift that import alert. But remember, for Ipca Labs, they haven't had these facilities factored in since 2015, and hence the street is giving them a valuation beyond the US business. They did acquire Unichem's international business for this particular reason, because they would get access to the US markets through their manufacturing facilities, and hence in the larger scheme of things, these 11 observations, while we don't know the details, might weigh but might not weigh as much, because in any case, the worst is probably factored in.
Right, thanks a lot, Ekta, for that. Well, KEC International is the other stock that we're looking at this morning. Vivek is here to give us more on that. Vivek.
Well, good morning. So KEC International, the stock is buzzing. So today the company has gone ahead and given a press release where they've highlighted, the number of new orders that they've received across various businesses. Total ordering is over 1,370 crores. Now, the order breakup is within the railway space. They've got orders for the automatic block signaling system and overhead electrification. Within the civil segment, they've received orders for both residential as well as commercial building segments. And even in T&D, they've received substantial orders for a 400 kilovolt transmission line as well as star supply both in India as well as USA. Now, when you're talking about the order book of KEC, at this time around, it's actually at an all-time high. At the end of FY23, the company said that was well over 30,000 crore, and that is something that augurs quite well as far as KEC is concerned.
All right. Thanks a lot, Vivek, for that. Well, that is on KEC International. Just wanted to mention, as I was telling you folks, there is a big move that we're seeing right now in the real estate space. In any case, most of these real estate stocks are at 52-week highs, and this morning as well, something like a Puravankara is up almost 5%. Prestige Estates is up 3%. It's been rallying day after day, and this month already, not even 15 days of June are up, and Prestige Estates is up 23%. So that's been the kind of move that we've seen in this space. And then you have a couple of others. Ramkrishna Forgings, they've just won an order. That stock is at a fresh 52-week high as well. And Trent, Abneesh Roy was talking about Trent. It's one of the favorite stocks of Nuvama. That is at a fresh 52-week high. The stock has rallied almost 30% in this year, in 2023, that is. So lots of big movers. Don't be fooled by the headline index, which is absolutely flat. There's plenty of action beneath the surface. Let's slip into a quick break. On the other side of the break, our special segment, It's the Economy. My colleague Lata will be joined by Rajkiran Rai, who is the MD and CEO for National Bank for Financing Infrastructure and Development, to discuss the big infra push in the country and the national infra pipeline.